Welcome to the Canadian Investors course, Session 1 on income investing. On page 2, you'll find the terms of use and disclaimer, which was fully read in the introduction. Please read it again. Session 1, Income Investing, Short-Term. You'll see a cartoon on page 2 with Ben Bernanke and some traders who are trying to sell him a bill of goods. Fixed income investing can be divided into 3 categories. Short-term, which is, and this is in the bond market. It's not like fixed income investing, say at the bank, but in the bond market, short-term investing is anywhere from 30 days to 5 years. Medium-term investing is 6 years to 10 years, and long-term is 11 to 30 years. Short-term is anywhere from 30 days to 5 years. Interest-bearing investments such as Canada T-bills, provincial bills, term deposits, bankers' acceptance, corporate paper, money market instruments, Canada savings bonds and Ontario savings bonds and other provincial savings bonds, term deposits, and GICs. Why is 5 years short term? Well, there's life beyond a bank account. Interest-bearing investments are available to Canadians in a range from 30 days to 30 years. Investments of 1 year or less are really considered cash and cash equivalents. Anything from 2 years to 30 years moves over to the bond market. Let's look at Canada Treasury bills first. Well, first of all, Canada T-bills are CIC insured, and so why do we need that? Well, it means that anything that's CIC insured is backed by the government. CIC insurance only goes up to $100,000 per account. So if you have more than one investment, have an investment of more than $100,000 from one institution, you will have CIC insurance up to the $100,000, but not beyond that. Canada T-bills are probably the safest investment in Canada, and they're available in maturities ranging from 30 days to a year. So let's think about buying a T-bill. First of all, we have to choose the maturity and the quantity, and then we have to determine how much to invest. Also, it's important to understand that T-bills are bought at a discount and they mature at par. So if you want to buy a $25,000 T-bill, let's say a $25,000 90-day T-bill that pays 3%, what's the cost of the bill? Well, a $25,000 T-bill that matures in 90 days will cost $24,821.21, which anticipates the 3% annual interest that you'll receive on that bill. All T-bills, bankers' acceptance, and corporate debentures are sold at a discount to their par value. So they're sold at a discount, they mature at par. Other short-term money markets instruments include bankers' acceptance, which typically are larger denominations, 100,000 minimum, and then usually go up in $1,000 increments from there. Corporate paper, which is the same as bankers' acceptance, but in even larger denominations. And money market funds, which can include high-interest savings accounts and so forth. Here you got to shop around and absolutely make sure that they're covered by CDIC. Credit rating for money market goes R1, R2, R3, where R1 is high and anything with a bigger number is a worse credit rating. For money market, most people want to stick to R1, obviously, because you're not looking for any risk. You're really looking to park the money safely, get a little bit of a return on it, and absolutely get the money back on time and exactly as expected. Guaranteed investment certificates. Typically, they're issued by banks. They're called GICs. They're issued by banks, trust companies, and credit unions. And it's basically you lending them money for a while. GICs, for example, are what most institutions use to finance their mortgage book. If you think you may need your money back a little bit early, you need to buy a GIC that allows you to change your mind without any penalty. In other words, a cashable one. You probably have to invest at least $500. Typically, they have a fixed term ranging from as little as 6 months, which are very uncommon, but more typically 1 to 5 years. Sometimes you can find GICs that go up to 10 years. With most GICs, if you need to get your money back sooner, you may have to forego any interest that you expected to receive. You may even have to pay a fee or a penalty. One advantage of purchasing GICs through most IROC institutions today is that there is now a secondary market for GICs, which does simplify the liquidity problem if you need liquidity from your GIC. If you'd like to know more about that, contact a trusted wealth professional who can enlighten you further. GICs are CDIC insured up to $100,000. So your question, the $64,000, or perhaps let's say $100,000 question, is can you invest more than $100,000? If you're working with an IROC advisor who can generate a secondary market for the GICs that they sell, yes, you do. Now, very important, have all your GICs covered by CDIC insurance up to $100,000. So let's say you have 2 GICs in your RSP. The first GIC is for $275,000. The second one's for $165,000. Well, the bad news is, if there are 2 GICs with different institutions, you're covered for $100,000 of principal and interest on each one, which means that for the $165,000, you've got $65,000 exposed, and for the $275,000, you've got $175,000 exposed and uninsured. You don't have to do it that way, however. In fact, you shouldn't. You should break it up into GIC. You break up your GIC portfolio into increments of 100,000 or less, and make sure that you have CIC insurance on all of them. If you'd like to know more about how to do that, do contact a trusted wealth professional who can explain how to get that taken care of. In fact, assuming that the advisor has enough institutions to spread the money over, you might be able to have up to a couple of $1 million in GICs and have it qualify for CDIC insurance 100%. So there are 2 ways you can insure more than $100,000. You can get your car and drive it around and open accounts at all the different banks you can find. Or you could buy GICs with an investment advisor, as I said earlier, who's licensed to represent many financial institutions. And the best thing is that it doesn't cost you any extra fees to do it that way. So why wouldn't you? Now, let's look at the Western-based credit unions. Each province in Canada offers deposit insurance for credit unions and Caisse Populaire. Each province has different guarantee limits. BC has an unlimited guarantee. Below is the information from the BC government site. It's different from Ontario. The Credit Union Deposit Insurance Corporation of BC is a statutory corporation that provides deposit insurance for members' deposits with BC credit unions. The Financial Institutions Commission, an agency of the government of BC, is responsible for administering CUDIC and for regulating financial institutions operating in the province. The following questions and answers address the most common deposit insurance topics. For more information, please visit the website www.cudicbc.ca. What's guaranteed? All money on deposit and money invested in non-equity shares in a BC credit union is 100% guaranteed, including foreign currencies and accrued interest, regardless of the length of the term to maturity. Which credit unions are covered by this guarantee? How do I apply? Deposit insurance applies to all BC credit unions. It's not necessary to apply for deposit insurance. So what's guaranteed? The credit union equity shares and investments. So this is an example of how BC is very different from Ontario, for example. So go to your province's website, find out what guarantees you're entitled to, and those make sure you know which ones apply to you. In short, be a smart investor. Why place yourself and your family in an exposed position when you don't need to? Now you're a little bit educated. But you might ask the question, could it really happen here? Well, let's take Deutsche Bank in Germany. Most people would consider that to be one of the most solid institutions in the world. However, today, well, I'm talking today as in June 2017 or July 2017, Deutsche Bank is in serious trouble. And who would have imagined that even recently? So the bottom line is, why take risks when you don't need to? You need to find someone who can take care of your guaranteed investments, make sure that they're all insured with no extra fees, all in one account. To do that, you can look on the Trusted Wealth Professionals website, input your postal code, locate an advisor in your area who can help you. That's the end of Session 1. Thank you for listening.